Good morning to all. Welcome at ICI portal for classes of ICI CA Intermediate Group 2. We are already in the process of running the various chapters. Earlier, we have already done accounting standards. We have completed from first to the end whatever accounting standards are in your syllabus. So I expect that all of you have done it very clearly, or those who have left it, or those who have not done it. I suggest you to do that by way of the recordings available with you at ICI CA Tube channel. For that, I would like to be thankful to. I'm thankful to ICI, and also I'm interested, or I would like to tell to all of you that you must also be thankful to ICI for giving you this platform by which you can study in a better manner in comparison to the earlier system of studies. So students, after completing accounting standards, we have to go for the next chapter, that is accounting for employee stock option plans. Purely a new topic for all of you, because in your previous classes, either you have done +2 commerce, +2 arts, or you have completed your graduation by way of BA, BCom, BBA, etc. You have not done this chapter in the previous classes. So it's purely a new chapter, just like accounting standards, because accounting standards are also covered only to a brief extent in the previous classes. But this topic is purely a new topic and not covered by you in your previous classes. So I suggest you to do it very seriously. I would like to discuss with you the weightage of this exam, of this chapter in your exam also. Before that, I would like to tell to all of you to send your presence that you are available. Good morning to Madhushiri, Hitesh Jain, Sudhanshu, Ane, Siddharth, Rahul, Ben Reddy, Aditi, and everyone, all of you who have who have already sent their presence, and who haven't sent their presence, they must have to send it. Good morning to all. It's really a great morning, because after enjoying a celebration of a great Indian festival, Raksha Bandhan, we are all get back to our works. I think all of you have enjoyed this particular celebration and festival with full happiness. May God bless all of you with this relationship, with the happiness of this festival. So students, while talking about the chapter accounting for employee stock option plans, you must have to keep it into your mind. The word is very much defined and automatically explains itself what it meant for. So let's start with the chapter. Yes, I think all of you may easily see my screen. I've already shared screen with you, from where we will cover all that, whatever is to be discussed today. This is your modules chapter. I'm going to do it from your module because this is good in your module. So open your modules for this chapter. This is chapter number 3 of your module. Chapter number 3, Advanced Accounting, Accounting for Employee Stock Option Plans. Expecting all of you have opened your books. So what is the outcome of this chapter? What is the requirement of this chapter? Let's understand it. They are interested to have concepts and for ESOPs. First of all, what is the concept behind this? What is the requirement of it? Why it has been launched? That is the main important thing, which is very much important to be understood, because whenever you will work at a very high level in the organizations, because you are not going to be appointed as a junior accountant or assistant accountant or an accountant, you will be appointed at a higher level like audit manager, credit manager, GM, CFO, like that. You will be appointed at a very good level because you are going to be a chartered accountant, which is a very good profile. So you must have the knowledge of the concept why these ESOPs are issued. We are calling them ESOPs. E for employees, S for stock, O for options, P for plans. ESOPs. We write here like this. ESOPs. So second thing, we have to understand the accounting treatment of ESOPs. How to record it in the books of accounts, how to post it, all that will be there. Basically, we should have to understand the recording process only, because we all know that after recording, the complete process is very simple, and it is always as we have done in the past, because recording meant for generalizing. So we have to understand the journal entries only. Once you will understand the generalizing concept, recording concept, you can easily post it as per the requirement. You may easily summarize it, analyze it, analyze it, and communicate it, because all those are the routine processes. The the change will always be in recording or journalizing process only, beta. Understanding the provisions of guidance note on accounting for shares based payments dealing with ESOPs. So basically, a guidance note has also been issued on accounting for share based payments dealing with ESOPs. So whatever the provisions are given in that should be understood. So there are three main parts of this chapter which you have to understand. According to ICI schedule, it is to be started in the previous lecture, but due to the reason we were covering accounting standards, we have postponed it, and today we are going to start it. So there may be some chance that we will cover it today, or we may continue it in the next chapter, next lecture. It will be as per the coverage today. So let's understand what meant for ESOPs. ESOPs, employee stock option plans, implies means those persons who are working with us. Stock means shares. Option means may purchase our share. We are giving them an option that they may purchase our share. We are not giving them shares. Instead, we are just giving them options. If they may, if they are interested to purchase it, they may. If they are not interested to purchase it, they may not. Plans, methods. So here we are going to discuss about the methods, the process, the system by which our employees are given a benefit of purchasing shares of our company. But why employees are given this advantage and what it meant for exactly, you have to understand. In this case, if the share price is rupees 100 per share in the market, our price is 100 rupees. in ESOPs, we are giving them option that they may purchase our shares for rupees 60 per share. So we are giving them an advantage to purchase our shares at lower price, and they will be benefited by rupees 40 in this case, or as per the case in the case we have given them the option. So why this benefit has been given to them? A product which is available in the market at rupees 100, they may purchase it, but we are giving them an option that they may purchase it for rupees 4 rupees. How much? 4 rupees for at a lower price. Why? One thing is they are our employees. That is very good to understand, because if we are giving an advantage to our employees, that is obviously because they are part of the organization. They are working for the organization, and if they will work honestly or for the promotion of the business, obviously business will be benefited. But simultaneously, one more thing is there which is very much important, which you have to keep it into your mind, that why these ESOPs are issued. Actually, ESOPs are not issued normally as it is. Like, an option is not given to the employees that they may purchase shares of the company today itself. Normally, we are giving them an option that if they will work in the company for 2 years from now, then they will be given an option to purchase 500 shares of the company. So there is a requirement behind that. There may be condition behind that, that they may have to work for 2 years, or if they will satisfy this condition, any condition may be fixed. Like, if the growth of the company will be more than 10%, means profit of the company is more than 10%, in that case, all employees or the specific employees will be given an option to purchase 100 shares at lower price. Why? So that they may work hard, they may have to work collectively, jointly for the benefit of the company at large. Nowadays, you see that there are many startups coming into the market. The basic concept behind the startups which works is the ESOPs. Normally, just like ESOPs in startups, what work is done? In that case, normally salary is very limited because startups are not able to pay high salaries. Instead, what they give an option to the employees that if they will work with us for a particular period and the company will grow, then obviously they will get benefit out of it, because whatever the share price of the company, whatever the earnings of the company, that will completely affect the share price, and also the dividend will be given accordingly to the shareholders. So we are giving them an option that if they will work hard for the company, they will get benefit. They will be given so much number of shares, so much number of there are many options which are given to them. So all that is there. So in Hindi, I would like to let you be clear what meant for ESOPs is employee stock option plan. That meant for very simple, that we are giving an option to our, हम लोग अपने जो employees हैं उनको एक ऑप्शन दे देते हैं कि आप लोगों को हम लोग अपनी कंपनी में शेयर्स दे देंगे. वो शेयर्स मार्केट प्राइस से काफी कम रेट पर देंगे ताकि आप लोग उसका बेनिफिट ले पाओ. उसको मार्केट में अगर आप सेल करना चाहते हो, सेल करके प्रॉफिट कमा पाओ. और इवन उसमें ये भी होता है कई बार कि सेल नहीं करना अलाउड होता है इमीडिएटली, उसको भी रिटेन करना पड़ता है कि आप इसे रिटेन करोगे 6 मंथ्स के लिए और 1 ईयर के लिए, उसके बाद आप इसको सेल करोगे. सो ऐसा कुछ कंडीशंस के साथ हम लोग पहले कई बार कंडीशन लगा देते हैं कि 2 साल तक अगर हमारे पास आप काम करोगे तभी हम ये शेयर्स आपको देंगे, अदरवाइज आपको शेयर्स नहीं देंगे. और दूसरा, हमने शेयर्स भी दे दिए उनको और साथ में एक कंडीशन भी लगा दी कि आफ्टर 2 इयर्स आप ये शेयर ले लोगे, ठीक है, और उसके बाद भी आपको ये शेयर्स 2 इयर्स तक रखने हैं हमारे, ऐसे नहीं कि इमीडिएटली सेल कर देने हैं. तो ऐसे कई कंडीशंस के साथ हम लोग उनको शेयर्स देते हैं, जिसको ESOPs कहा जाता है, एम्प्लॉई स्टॉक ऑप्शन प्लान्स कहा जाता है. I think that ESOPs concept is clear to all of you. When ready, very good. Contribution of concepts, contribution of logics by you is always good. Now, let's understand what your module says. First of all, it has been given that the process of issuing ESOPs is, first of all, grant of option. Option is granted. Then, what meant for grant of option? It has been divided into four parts: granting, vesting, exercise, allotment. What meant for grant of options? That meant for giving an offer to them. So it's offering. We are giving an offer to our employees that we are interested to. We are offering you this much number of shares. Now, vesting meant for what? Vesting meant for if you will vest in the company for 2 years, if you will work in the company means under some condition. So it's condition. If the company will grow by 10%, if you will work with us for 2 years, these are the conditions. So vesting means for you will have to vest that, you will have to fulfill those conditions. Then exercise means for the period in which you can purchase those shares. Like we have given them the option that if they will work with us for 2 years, they will be allowed to purchase shares of our company within 1 month after that, after completion of vesting period. Because ये नहीं कि will give them the opportunity कि आप लोग जब चाहो ये shares purchase कर लो. You can't purchase it shares after the completion of vesting period for long time. There will be a condition behind that also, that you will have to purchase it within just 1 month whenever vesting period is over. So your vesting period is 2 years. We are giving them one more month to exercise that option to purchase those shares. Once they will exercise that option, whatever option is given to them, we will allot them. That is issue of shares. So we'll issue them the shares. That's it. I think these four steps are very much clear to everyone. सर टाइम गैप क्या होता है, कितने साल बाद आप परचेज कर पाओगे, कोई खास वजह? Basically, we are making all this system to retain the employees. One option, one thing, that they may have to be retained by us, they may work in the company. There may be a chance कि ये जो employees हैं ये हमें छोड़ के चले जाएं. हमारे पास आया एक ऑप्शन, एक एम्प्लॉई आया काम करने के लिए, उसने 6 मंथ्स काम किया, 6 मंथ्स तो उसको सिखाने पे लग जाते हैं, उसके बाद वो हमें छोड़ के चला गया, हमें क्या एडवांटेज हुआ? हम तो उसको ट्रेनिंग ही देते रह गए. तो हमने इसलिए कंडीशन लगा दी कि अगर 2 साल तक आप काम करोगे तभी आपको ये शेयर्स मिलेंगे. अगर आपको लगता है कि 2 साल के बाद, 2 इयर्स के बाद जितनी आपकी सैलरी है, मंथली सैलरी है, लगभग 3 मंथ्स या 4 मंथ्स की सैलरी के बराबर आपको एक बेनिफिट मिलने जा रहा है, जस्ट लाइक अ बोनस. तो आप ऑब्वियसली उस कंपनी में रिटेन करोगे. आपको पता है कि मुझे एक अच्छी खासी अमाउंट मिलेगी. मान लो आपको 1 लाख रुपीज पर मंथ सैलरी है, तो कंपनी कहती है कि अगर आप हमारे साथ 2 इयर्स तक काम करोगे तो हम आपको इतने शेयर्स देंगे जो कि इस रेट पर होंगे, तो हम इतने रुपए पे आपको देने जा रहे हैं. तो ऑब्वियसली उस केस में क्या होगा, अगर आपको लगता है कि मुझे उससे 3 लाख का बेनिफिट हो जाएगा, दैट मीन्स फॉर आई विल गेट एडवांटेज ऑफ द प्रॉफिट इक्विवेलेंट टू 3 मंथ्स. तो 3 मंथ्स का प्रॉफिट जो है, 3 मंथ्स की जो सैलरी है वो मुझे फ्री में मिलने वाली है. तो मुझे अगर लगता है कि मुझे फ्री में कोई पैसे मिलने वाले हैं, तो ऑब्वियसली मैं उस कंपनी में रिटेन करूंगा, उसमें काम करूंगा. दूसरा उसमें रहा जाता है कि हम लोग ये कह रहे हैं कि आप उस केस में, ठीक है, गुड, वेरी गुड. सो मैसेज हैज बीन रिसीव्ड दैट इट इज क्लियर. गुड मॉर्निंग टू एवरीवन बेटा. Whomsoever are late, sending their presence, very good. Presence must be sent even if you are late, no matters. some conditions are given. From theoretical point of view, it is given, too much theory is given for this particular chapter. I'm not going to cover each and everything of the theory part, because our concept is basically to understand the concept, why it is issued, what is the base behind it, and then we have to go for the accounting treatment, which is much more important. So we will go accordingly, beta. You may, if you have a time, you may read this theory part, but whatever is important, I'll help you. So let's go forward. Now, whenever this is issued, it will be by way of special resolution passed by the company and subject to such conditions as may be prescribed. So stock options are given subject to the special resolution passed by the company. So obviously this is a system. Now there is a share-based employee benefit regulation 2014, which covers all this. So that is given here, that it is applicable for listed companies only. Let it be very much clear. ESOP system is preferably for listed companies. Yes, anyone can issue shares. There is no problem to their to their employees, but rules, regulations, all that are applicable on listed companies only. Means they will have to follow the rules as per the company, as per the SEBI. That is shares based employee benefit regulation, not SEBI, Securities Exchange Board of India. It is share based employee benefit regulation. There are many provisions, processes, etc. of employee stock option schemes, employee stock purchase scheme, stock acquisition rights scheme, general. So there are many things which are given here. Now, in addition to that, guidance note is there, which is to be taken as a base for this purpose. But you need not to worry. Whatever is there, whatever is mentioned in all these regulations, whatever is important for you, will cover that. You need not to worry about all this. This is just for the concept that from where it exists. Next thing is, we have given them an option that they may purchase the share. We have given them the option that they may purchase the share, but simultaneously there are a number of other ways also. So let's understand what are the basics. What is the other arrangements? Share-based payment arrangement. This means for that we may give them an option either to convert their whatever the ESOPs are given to them, that can be converted into only the shares or only cash, or as per their option they may get it be converted into cash or shares as per their wish. So it meant for we may give them an option that after vesting period you have an option to either purchase the shares, one option, that is a in that case only shares will be issued in. Second concept may be there. In that case, it has been an arrangement where they may get cash only. They may not get the shares, they may get cash only. And third thing is they may get shares or cash as per their own wish. So that is given to you. It's an arrangement between the enterprise and another party, that is employee, that entitles the other party to receive what they will receive, cash or other assets for amount that are based on the value of equity instruments. Means they may get cash or they may get equity instruments including shares or share options of the enterprise. Or another group enterprise means like HDFC have various verticals, various group companies like HDFC Ergo is there, HDFC Limited is there, HDFC Credila is there. Many organizations are there. You are working in HDFC Limited, but company says you will be able to get shares of HDFC Bank, not the HDFC Limited. So that means for you may get shares of another group enterprise. provided the specific vesting conditions are met. So this is the second option. Third is they have an option to either receive goods or cash, goods or services from the supplier. Just a moment. So they have been given an option to either get cash or equity instrument. Share-based payment arrangement meant for what? They have mentioned it. It's a transaction in which the enterprise receives goods or services from the supplier of those goods and services in a share-based payment arrangement. So, or incur an obligation to settle the transaction with the supplier in a share-based payment arrangement when another group enterprise receive those goods or receive means meaning thereby very simple key either you will get cash or you will get shares. It is all according to the conditions mentioned in that particular case. All that theory part is not too much important. Yeah, this is important for you. What means for the important terms to be measured. What means for exercise? Exercise means for purchasing the shares or getting the cash, whatever option is given to you. Share option means for that that gives the holder a right. What means for option? You have been given a right that you may purchase it or you may not as per your wish. And then exercise period is a period in which you have to purchase it. I have already mentioned it. Expected life is of an option meant for the period of time from grant date to the date on which an option is expected to be exercised. Means the total period from grant date to the date on which an option is to be exercised. That is practically a vesting period we can see. Expected life and vesting period is just like same. Exercise price means for the price at which you will have to purchase it. The price at which you will purchase it. Fair value meant for the amount for which an asset could be exchanged or a liability settled or an equity instruments granted could be exchanged between knowledgeable means at which it can be sold into the market. It is as same as earlier. Fair value meant for the market price of the shares at which they can be sold into the market. Grant date, the date on which it has been declared to them that you may get it after the completion of the after the fulfilling these must terms and conditions. So this is not after fulfillment of terms and condition. I already mentioned what means for the grant date. Granting is made when you will join the organization or whenever organization is interested to offer it, whenever company offers it to its employees. The date is grant date. Measurement date is the date at which the fair value granted is measured for the purpose of this guidance note. Means the date at which the fair value of the equity instrument granted is measured. Measured means money form. It is measured in terms of money. That normally it is measured on grant date. For transactions with employees, measurement date is grant date. I of I would like to take an example because now it is becoming lengthy. Have a break and understand the concept once again. On 1st of April 2021, company have offered to its employees that they may get 1,000 shares of the company after completion of 2 years of service. So this offer is given to the employees. So that this date is called grant date, on which this is granted. Now, the period of 2 years is the vesting period. Now, according to this, the date will be completed on, the period will be completed on 31st of March 2023. And at which price? At 40 per share. So, what is the vesting period? That is clear to everyone. Now, exercise price is rupees 40 per share. Now, whenever they will offer it, they have offered it on grant date. They have offered it on that date. They have finalized the price, and on that date, fair value per share is rupees 90 per share. The price at which it can be exchanged, that is called 90 rupees per share. So, and the shares are to be purchased after vesting period. It is to be purchased within 2 months. So exercise period is how much? That is 1st of April 2023 to 31st of May 2023. So this is the exercise period, because 2 years are completed in this period and further 2 months are to be taken. Note it down, each and everything. You will have to note it down. If noted, send me noted so that I can proceed. Send to me noted so that I can proceed. Weightage of this chapter is minimum 5 to 10 marks. Nothing. If you will complete this chapter within just 3 hours, and against that you will be given minimum 5 to 10 marks into your exams. That is, the weightage is 5 to 10% of your total 100 marks of your exams. That means so it is a beneficial thing, and the concept is very easy to understand. After completion of this chapter, I assure you that you will be perfectly capable to solve it into your exam. Many questions have come into your previous exams out of this chapter. So comparatively, it is a very important chapter because new thing is there in this chapter. So normally they go for a question out of this chapter. Very good. So why ESOPs are issued? That has already been discussed to some extent. Now it is given here. You may see that this is link personal wealth creation to organization creation. So In this case, wealth creation of organization is automatically linked with the wealth creation of the employees also. Now if employee think that if company will grow, I will also grow, obviously he will do work with more concentration, more hard work. So it is linking attract rewards, motivate and retain talents at the startup and growth stage. Deferred compensation strategy and good retirement benefit plans. Obviously, a person will get a good retirement plan with that if they will given an offer that they will get shares for this company, which is to be kept by you for further 10 years. After acquiring it, you will have to keep it for 10 years. Now, to one from one concept, it is normally binding the employees, but simultaneously their retirement plan is automatically prepared. If the company will grow and the value of shares will also increase, which normally does, they will be benefited in the long run. Their retirement plan is automatically prepared. Reduction in cash cost. Mark. Obviously, in such cases, normally we are not paying too much salary, that is salary equivalent to market. If the market salary is 1 lakh per month, we offer them only 80,000 per month. Simultaneously, we are offering them shares of our company, that is ESOPs. So in that case, we can pay less in comparison to market, and that benefit automatically goes to us. So can be especially important for startup. I already discussed. You promote employees ownership culture. Employees will become owners of that company. So employees ownership culture brings more advantage to the organization because those who are working for the company will become owners of the company. So helpful tool in cash crunch already discussed, because when salaries are not company is not able to pay good salaries, they can offer them ESOPs for the benefit. Instead of giving them bonus by way of cash, they may be given this ESOPs, which will be more easy to be given, because in this case company's share capital will also increase, but simultaneously one more thing is there, that loyalty, performance, present and potential contribution and opportunity cost will be there. So all these are the benefits which will come to you. It has already been discussed, which actually it is mentioned in your guidance note, that it must be applied to all employees, including equity settled share based payment transaction already discussed, that we will give them the option to purchase only the equity shares of our company. Or second option, we may give them the option to settle it in cash, or there may be third, in which case we offer them can choose whether the transaction is to be equity settled or cash settled. That is all up to the choice. Is they may go for the equity shares or they may convert it into cash. Like we have given them an option that if they will complete 2 years in our organization, then after completion of 2 years, they will be given an option to purchase equity share. This is equity linked. But in case we give them an option that they may go for only cash. Cash linked means for we will give them cash according to the fair value at the time of after completion of vesting period, you may say. Like our vesting period will be over on 1st of April 23, I've already mentioned you. Then company gives them an advantage that when our vesting period will be over, then they will be given cash equivalent to the value of equity shares. So whatever the value of equity shares, they will get cash equivalent to that. Like in the given case, we offer them 1,000 shares at 40 per share. So they will be given 1,000 at the rate of fair value at the time of exercise of option. Means 1,000 at the rate, this will be the cash to be given to them at the rate of fair value as on 1st of April 2023. So if they will retain this, if they will work with us for 2 years, they will get 1,000 shares. They will get cash equivalent to 1,000 shares at the rate of the fair value. So this is cash linked. Or third is they are given option. Either they may get cash or equity shares. So that is basically mentioned in your AS. AS में क्या mention है कि या तो आप shares ले लो at the end of the period, और दूसरा मेथड क्या है कि आप शेयर्स नहीं ले रहे, आप कहते हो मैंने तो कैश लेना है, वो कहते हैं ठीक है आप कैश ही लो, उस केस में वो कैश ही देते हैं आपको सिर्फ. और थर्ड ऑप्शन आ जाती है जिसमें वो कैश या शेयर्स दोनों की ऑप्शन दे देते हैं, आप जो चाहो ले लो. इट विल बी एज पर योर चॉइस, यू मे गेट इट. आई थिंक इट इज क्लियर टू यू. Now we are coming to accounting treatment. So for accounting treatment, we must have to see that accounting treatment is very much important. Read it once, एक बार पढ़ो, आपको मैं बताता हूँ सारा. एक बार आप इसको पढ़ो. I would like to explain you. There are two methods for accounting procedure. Let's understand it. One is fair value method and second one is intrinsic value method, which has been given in your guidance note. That how to make accounting treatment of it. There are two methods. One is fair value and second one is intrinsic value. But what guidance note recommend? It recommend only fair value approach. It doesn't recommend intrinsic value approach. So these are all theoretical parts. Practically, though, I would like to give you the journal entries within just few minutes, and you will do that. Now, here the services received to us will be entered in the books whenever service will be actually received. That it meant so the enterprise shall recognize a corresponding increase in equity if the services were received in an equity settled employee stock option plan or liability will be settled accordingly. When the services received in an ESOP do not quantify for recognizing an asset, they shall be recognized as an expense. So all that is given from theoretical point of view. You must just read it once. Let's go for the journal entries, beta. Write it down with you because it is not given in your module in this way. So it is to be noted by you. Journal entries for ESOPs. What happens in the given example, what we have discussed? Let's understand the concept according to this example and we will do the question accordingly. Here, when the question, when the offer has been granted, that is granting date, on 1st of April 2021, we have offered them to purchase 1,000 shares. This will be for one particular employee, but we have offered this to 100 employees, then it will become 1 lakh shares. We have offered it to 1,000 employees, it will become 10 lakh shares. So it will all depends upon the number of employees to whom this offer has been given. Second thing is beta, we have offered it for rupees 40, but market price is fair value is rupees 90. So this point is also very important. Period is 2 years, which is very important. This is a vesting period already discussed. Then exercise price is clear. Exercise period is also clear. The number of times it may happen that after the completion of 2 years, up to 2 years, we are expecting that our employees will purchase it. But after completion of 2 years, we have offered it to 100 employees. But only 90 employees has purchased it, 10 employees doesn't purchase it. Why? They have left the company before completion of the period. One reason may be there. Second reason, they have completed the vesting period, but they are not interested to purchase it. We can't give them by force. This is all an option given to them because the name itself defines it. ESOPs, implies stock option plans. So it meant for, we are giving them an offer only. It is up to their choice, they may or they may not purchase it. So बेटा दोबारा से एक बार समझ लो कि हम लोग ये सारा क्या कर रहे हैं कि इसमें 1 अप्रैल 2021 को ग्रांटिंग डेट को हम लोगों ने शेयर्स ऑफर करे अपने एम्प्लॉइज को, और मैंने 100 एम्प्लॉइज को ऑफर करे, उसमें से मेरे 90 एम्प्लॉइज ने 2 इयर्स के बाद, बिकॉज 2 इयर्स का वेस्टिंग पीरियड है, 2 इयर्स के बाद उन्होंने इसको लेने को तैयार है। 10 एम्प्लॉइज लेने को तैयार नहीं है। रीजन दो हो सकते हैं। पहला रीजन कि वो एम्प्लॉइज ने वेस्टिंग पीरियड ही कंप्लीट नहीं किया। दूसरा रीजन हो सकता है कि वेस्टिंग पीरियड तो उन्होंने कंप्लीट कर लिया बट दे आर नॉट इंटरेस्टेड टू परचेज इट, वो खरीदना नहीं चाहते। मैं तो ऑफर कर रहा हूं बट दे आर नॉट इंटरेस्टेड। सो इट इज ऑल अप टू देम, ये उनकी मर्जी पे है कि वो परचेज करें ना करें, हम किसी को जबरदस्ती तो दे नहीं सकते। अब जब मैंने ऑफर करे हैं, जिस दिन ये ग्रांटिंग डेट है उस दिन मेरे शेयर्स मैंने 40 रुपीज पे उनको ऑफर करे हैं, बट उस दिन मार्केट वैल्यू क्या 90, तो 50 रुपीज का लॉस मैं बेयर करने जा रहा हूं। लॉस, दिस इज एक्सपेक्टेड लॉस विच विल बी बोर्न बाय मी, 90 माइनस 40, 50 रुपीज का लॉस मुझे बेयर करना है। तो ये सारा केस है जो आपके सामने है। इस केस को समझते हुए इसके बेस पर हम जर्नल एंट्रीज को समझेंगे और करेंगे, बिकॉज जर्नल एंट्रीज लिखनी जरूरी नहीं है, उसको समझ के करना जरूरी है। सो जर्नल एंट्रीज करते हैं। सबसे पहले तो देखो, जब 1 अप्रैल को हम लोगों ने ये ऑफर करा, अब आपको बताया गया डू नॉट एंटिसिपेट गेन्स, प्रोवाइड फॉर प्रोबेबल लॉसेस। कभी भी अगर आपको लगता है कि मुझे फ्यूचर में कोई लॉस होने वाला है तो आप उसको आज ही राइट ऑफ कर लेते हो, आज ही बुक्स में डाल लेते हो। ऐसा तो नहीं कि आप उसको पेंडिंग रखते हो कि नहीं कोई दिक्कत नहीं, हम इसको बाद में बुक्स में डालेंगे। आप तो उसको अभी डाल लेते हो, इमीडिएटली डाल लेते हो आप उसको बुक्स में। तो इसलिए हम लोग सबसे पहले तो इसे 1 अप्रैल से ही अकाउंटिंग करनी शुरू कर देंगे। फर्स्ट अप्रैल को अकाउंटिंग कैसे करेंगे? हम लोग अपनी बुक्स में कुछ ना कुछ प्रोविजनिंग करेंगे। हमें पता है कि जो हमें फ्यूचर में नुकसान होने वाला है, हम उसकी आज ही प्रोविजनिंग कर लेते हैं। व्हेनेवर वी आर एक्सपेक्टिंग एनी लॉस इन फ्यूचर, वी आर क्रिएटिंग प्रोविजन फॉर द सेम नाउ। So due to that reason, here we have to create provision for whatever loss we will bear in future. So उसके बेस पर एंट्रीज होंगी। उसके बाद हमने प्रोविजन क्रिएट कर ली, वी हैव क्रिएटेड प्रोविजन, बट देयर में भी ये चांस कि ये ऑप्शन लैप्स हो जाए और वो पर्सन इसको परचेज ना करे। There may be a chance that the option will be lapsed and they will not purchase the shares due to any reason we have discussed. Then we have to reverse that provision. हमें उस प्रोविजन को रिवर्स भी करना पड़ेगा। प्रोविजन का फायदा तो तभी होता है ना अगर हमने उसको कंटिन्यू करना है। प्रोविजन इज बेनिफिशियल ओनली एंड ओनली इफ वी आर इंटरेस्टेड टू कंटिन्यू इट। इफ दैट option has already been left by the share implies, then obviously that provision is to be reversed, that is to be cancelled. So accordingly entries are made. Presumption dates are there, presumptions are there. With that we will pass entries. First entry is when option is given, then loss, that is expected loss, I would like to say, then expected loss. What is expected loss? Fair value minus issue price. Like in the given case, 1,000 shares are offered to an employee for ₹40, whereas the market value is 90. So we are going to bear a loss of 50 rupees. This is clear to everyone? We are going to bear an expense, a loss of ₹50 because the price is 90 and we are offering him for ₹40. So we are going to bear 50 rupees as a loss in future. So that is to be written off now. But the issue is the period is how much? During its vesting period, which is 2 years in the given case. So that meant, so we have to write off loss of 50 on 1,000 shares in 2 years. So total loss is 1,000 into 50, 50,000. Annual loss to be written off 50,000 divided by 2 because it is to be written off in 2 years. So every year we will write off 25,000 rupees because we have a sufficient period to write it off. So we'll write off it within 2 years because 2 years period is given to us. So what will be the entries for 2 years? That is 31st of March. This entry will be passed. All provisioning has to be made on which date? On closing date. So this entry is to be passed on 31st of March 22 because we are expecting the year is 21-22. So on 31st of March we will do it and the entry will be very simple. First entry है आपकी employee compensation expense debit to employee stock option outstanding account with 25,000 rupees. This is a provisional amount which we have calculated in this case. It will change in every question, but entry will remain same. So this is creation of provision. Here, what is employee compensation expense? This is a expense or loss to be occurred in future. So it is created. Any expense is always debited. We know it very well. This is a nominal account which is debited in this case. Simultaneously, we have created a provision that is implies stock option outstanding amount. This is a provision which has been created, and provision always go to liability side of your balance sheet. So provisioning is already done. So whenever provisioning is made, whenever any expense is there, it is to be written off to P&L account. So second entry for this will be profit or loss account debit to employee compensation expense account. With that rupees 25. So it is written off to P&L account. All expenses are written off to profit or loss account. We know it very well. All provisions are written off to P&L account. So this has been written off. So there are two entries in the first year, that is on 31st of March 22, we have to pass this entry. And obviously same entry will be repeated in the next year, that is on 31st of March 23. Because provisioning is also to be made in the next year, because vesting period is continuing for 2 years. All provisions are done created on 31st of March as a query is asked by Karthik, which is very much important from knowledge point of view, from your conceptual point of view, that why this provision is created on 31st of March and not 1st of April. Beta, so you must have to note it down. I would like to let you explain all that also. Noted? First, send me noted so that I can proceed. Fast करना बेटा थोड़ा. Anyone may send noted if completed. Next is third entry. Already 4 entries are made, if you will see, because these 2 entries are first, second, and again it will be third entry, it will be 4 entry. It may be, if the vesting period is 3 years, it may be 5th and 6th entry also. If vesting period is 4 years, it will be 7th and 8th entry also, because these 2 entries will repeat every year during the vesting period. बेटा बड़ा सिंपल है कि वेस्टिंग पीरियड में ये एंट्री तो आनी है. हम लोगों ने टोटल 50,000 का लॉस बेटा जो होने वाला है उसको राइट ऑफ करना है. उसको पहले क्रिएट करना है फिर राइट ऑफ करना है. 50,000 का लॉस कैसे होगा? अगर ये 2 इयर्स का वेस्टिंग पीरियड को डिवाइड बाय 2 करेंगे और इक्वली हर साल हम राइट ऑफ करते जा रहे हैं. क्रिएट किया, राइट ऑफ कर दिया, क्रिएट किया, राइट ऑफ कर दिया. अगर 2 इयर्स वेस्टिंग पीरियड है तो 2 इयर्स में करेंगे, 3 इयर्स है तो 3 इयर्स में करेंगे, 4 इयर्स है 4 इयर्स में करेंगे. ऑब्वियसली द एंट्रीज विल रिमेन सेम. आई थिंक इट इज क्लियर टू एवरीवन. नाउ ये एंट्रीज चलती जा रही है. इसके बाद नेक्स्ट एंट्री क्या होगी? After then, when option will be exercised on exercise date on 1st of April 2023, exercise date is there. Period is given to them. How much period is given to them? They have been given 2 months up to 31st of May. We have already discussed now. एक्सरसाइज डेट क्या थी उनकी? 1st अप्रैल टू 31st ऑफ मई 2023. तो इस पीरियड में उन लोगों ने परचेज कर लिया. दे विल हैव टू परचेज द शेयर्स. सो आउट ऑफ 1000 दे हैव परचेज्ड 800 शेयर्स ओनली. So whenever they will purchase, the entry will be simple: purchase of equity shares against ESOPs. So what will be the entry? Simple entry is there. Bank account debit. पैसे आ गए. But whenever the amount will be received, we know it very well, we will receive less amount. We will receive only 40 rupees per share. But we already know that we have to suffer a loss of 50 per share, for which provisioning is already made. So that provision is to be used for writing it off. Employee stock option outstanding. It is appearing into your balance sheet with rupees 50 per share. Two, whenever shares are issued, always equity share capital is created, everyone knows, with the face value. Assume 10 rupees is the face value. Two, security premium. Any extra amount is called security premium. So how much is the premium? 90 minus 10 is equal to 80 per share. So they have exercised this option for 800 shares. So we'll multiply it with 800. Note it down. Amount received loss face value premium. Note it down. So why a provision has been created? Due to this reason only, because we know it very well that we will have to suffer a loss in future. So we have created a provision for that, and that is appearing in our balance sheet. But in our balance sheet, we have created a provision for 1,000 shares. 1,000 into 50, 50,000. During the previous 2 years, we have created a provision of 50,000. But how much provision is utilized? This is 40,000. Provision is created for rupees 50,000. Provision used. How much provision is used? It is 40,000. So now provision of 10,000 is not required because exercise period is over and remaining 200 shares offer is lapsed. Lapsed meant for now it cannot be issued exercised because after completion of period that offer is lapsed. So on 200 shares the condition is lapsed. Matlab on 200 into 50 that is 10,000. So this provision is not required now, which is appearing into your balance sheet. Because what we have done, we have shown it in our balance sheet every year with rupees 25,000. Within 2 years, it become 50,000. We have used 40,000. Now the matter has come to its end. We have to reverse that provision. Note it down so that I can proceed. Noted? Yes or no? Noted? Yes or no? Send me if there is any doubt till now. Whatever we have discussed, that must be clear to everyone, beta. Having any doubt, please send me. How to record when some employee left our organization in between? It means for simple. When an offer is lapsed or not applied, the treatment will be same. So whenever the exercise period is over, let's try to understand with an example also. Just try to understand this first, then we will come to that also, better. Because otherwise it will be mixed and it will be difficult to understand. I will do illustration number 2 for that after this. In that you will understand, because that is good illustration for this purpose. Next entry is 4, right? For reversal of provision already created. For reversal of provision. If a provision is created, it is to be reversed. The entry is very simple because this provision is appearing in our balance sheet by the name implied stock option outstanding account credit balance. As we know that the provisions have credit balance, so it will be debited to reverse to general reserve. Whatever profit is there, that will always be transferred to general reserve. Whatever revenue profit is there, so it will be credited to general reserve and debited to implied stock option outstanding account with rupees 10,000. Amount was 10,000. This was. So 10,000 rupees will be reversed from the implied stock option outstanding account. See in balance sheet, in liability side, what has been done? 21-22. We have created a provision of 25,000. In the next year, 22-23, another provision of 25,000 is created. Now it will become 50,000. In 23-24, 40,000 is used. Balance of 10,000 was left. This balance of 10,000 is transferred to general reserve. So this will come to an end. It will become 0 because it has been created from profit or loss account. So whenever provision is to be created, whenever loss is to be written off, whenever expense is there, it is to be written off from profit or loss account. But profit or loss finally goes to general reserve. We know it very well at the end of every year. Due to that reason, whenever profit is there, it will directly goes to its source. So what is the source? Source is general reserve. So it will go to general reserve. Is that clear? So in general reserve, 10,000 rupees profit is there, which has been transferred. Is that clear to everyone? Security premium part is not clear. Beta, whenever you are issuing share, what is the journal entry? I am issuing share, normal shares. The entry is bank account debit to share capital to security premium. I am going to remind you your CA foundation or +2 chapter of share capital. In that you have passed this entry. If we are issuing shares of rupees 10 each at 90 per share, then we are receiving 90 rupees, bank is debited with 90. Share capital is credited with face value and security premium with the 80 rupees, that is 90 minus 10. 80 rupees that we have to calculate. This is our duty to get it. So 80 rupees is the security premium. So we have entered it. In the same way, here share of face value of rupees 10 is issued 4 rupees, is to be issued 4 rupees 90. We have given it 4 rupees 40, that is our headache. But company will credit it with the total value. So company will credit it with 90. 90, how to bifurcate it? 10 is the face value, 80 is the security premium. So it will be generalized as it is bank account debit to share capital to security premium. But here payment is not going to be received in full. Here payment is not going to be received in full. Instead, what will happen? We have to receive only 40 rupees. So where will go that 50 rupees, balance 50 rupees, that will be written off from outstanding account which has been created by us as a provision. So we have made it in this way. 50 rupees go to provision account. Remaining entry is same, already we have done it in your +2, your BCom, it in your CA foundation, bank to share capital to security premium. Just we have made addition of outstanding count, employee compensation, employee stock option outstanding count. Shares are issued either at premium or discount. ESOPs are issued at discount. So how can we have security premium, sir? Beta security premium is always based on the face value of the share. It doesn't matter that how much is the market value of the share. Market value is somehow different. Here, market value is 90 rupees per share. But in books, when the share was first issued, its value was decided at that time, its face value, it should be 10 rupees. Like if you will see, shares of State Bank of India is approximately 550 rupees per share. But the face value is only rupees 1 per share. So what is the remaining amount? Now, it is not mandatory that we have to give it to our employees at less than 1 rupees. We may give them at 300, we may give them at 400. Obviously, they will be benefited in that case also. देखो ना एक हमारा एम्प्लॉई है, उस एम्प्लॉई को तो बेनिफिट इससे है कि मार्केट में क्या रेट चल रहा है प्रोडक्ट का और उसको कितने का मिल रहा है, उसके ऊपर टैग कितने का लगा है इससे कोई मतलब नहीं है उसको. इट डजंट हैव एनी रेलेवेंस ऑफ दैट पर्टिकुलर टैग. तो ये तो टैग है कि उसकी जो फेस वैल्यू 1 रुपया है या 10 रुपया है या 100 रुपया है. बट हमें तो कंपैरिजन किससे करना है? मार्केट वैल्यू से, टू चेक इट आउट वेदर ही इज बेनिफिटेड और नॉट. लेकिन साइमल्टेनियसली हमें ये भी देखना है कि जो हमारा एम्प्लॉई है, उसका किताबों में एंट्री कैसे होनी. बुक्स में जब भी एंट्री होगी तो उसमें जो भी अमाउंट है उसको बाइफरकेट करके डालना पड़ता है. शेयर कैपिटल और सिक्योरिटी में ये आपको +2 में करवा दिया गया था बेटा. ऑलरेडी यू हैव डन इट इन +2. तो ये तो +2 का कंसेप्ट मैंने किया बेटा. सर 2 डाउट्स. फेयर वैल्यू मे आल्सो चेंज एट वेरियस टाइम ड्यूरिंग द पीरियड. बेटा वी हैव टू keep it into our mind that we have to do each and everything according to the discussion, according to the working which was done at the time of granting of the option, because otherwise there will be a regular up down, and this up down comes even in seconds. If you will see the stock exchange, if you will see the share market, the prices of shares are going up and down in every second. So whatever price they have decided, we have to go accordingly. वो रिकॉर्ड नहीं करना जो बाद में चेंजेस आ रही हैं. सेकेंड डाउट विच वाज आस्क्ड अर्लियर, 31st को क्यों 1 तारीख को तो ही पता चल गया था कि लॉस होने वाला है तो भी प्रोविजन क्यों नहीं बनाई? बिकॉज प्रोविजन इज ऑलवेज क्रिएटेड ऑन 31st ऑफ एवरी ईयर. हाँ, ये तो मैंने अभी बताना है बेटा. वेल टॉट टिल नाउ, कंसेप्ट इज क्लियर. ओके. Now, why provision is created on 31st of March? Whenever we are paying salaries, we are passing an entry salary account debit to cash. That has been clear to everyone. Why we are not passing entry at the end of every month? Salary to outstanding salary, then outstanding salary to cash. Because during the year, we are not going for the concept of cash basis. We are not going for the concept of mercantile basis. There are 3 bases of accounting. We know it very well. Mercantile basis, that is called due basis. Second is cash basis, that is on payment basis. And third is hybrid, mixture of both. This is not allowed. So these 2 basics are followed. While making entries during the year, whenever an expense is paid, we enter it in our books. We are not making it due and then making the payment in normal organizations. So at the end of the year, on 31st of March, we know that the financial statement are to be prepared on mercantile basis. So we checks that how much are the outstanding, how much is outstanding at the end of the year, how much is prepaid at the end of the year, how much is pre-received at the end of the year, how much is accrued at the end of the year. And we are generalizing it as on 31st of March. Why? Because we have to calculate the profit on 31st of March only. We have not to calculate the profit on each and every day. Due to that reason, these provisions are to be entered only at the end of the year. Provisioning for future purpose. not for current purpose. So in 2021-22, this all year is a 1 year. So creating provision on 1st of April and 31st of March have same meaning. If you will see, both have same meaning, because whether you have created provision on this date, on this date, it will come into 21st, 21, 22. So we make all adjustments, all provisioning, all accrued, all outstanding on 31st of every year. Because if we check it on in every second that whatever is outstanding, whatever is accrued, then our accounting load will increase. A businessman is not able to absorb that load, because he will have to do the business also. He can't have a full heavily paid accountant for that purpose. Normally, all these things are to be done on 31st of March every year. I think this is clear to everyone. So have a break. After the break, we will come back and continue with the employee stock option plan. So let's have a break. Welcome back after the break. So we were discussing on the issue of employee stock option plans. Maybe there are some doubts to the students. I would like to take all that. After then I'll continue. Sir, in this case, the 90 rupees is also a fair market value only. Just a moment. Give me a minute. My laptop is. Hey, just a minute. Yes, please. So in this case, the rupees 90 is also a fair market value only. असल में 10 का शेयर तो 40 में इशू हुआ ना एम्प्लॉइज को, तो कंपनी को फेयर वैल्यू के ऊपर तो बेटा आई एम ट्राइंग टू लेट यू क्लियर ऑन दिस कंसेप्ट दैट we doesn't have to consider this thing from while issuing shares to the shareholders or anyone, that fair value is somehow different, issue price is different, and face value is different. You must not have to merge all these with each other. For example, I already taken an example of SB Bank. Like share of SB Bank face value is rupees 1 only, and market price is 540 rupees. Now, it doesn't mean for that there is a security premium of 539 rupees. It doesn't mean for this. If company is not going to issue these shares yet at this price, then this is not a security premium. Let it be very much clear. Whenever company will issue these shares to the public, this is just these are never compared with each other. This is not a purpose of comparison. The comparison is made only market price and issue price to check the profit or loss. Because if I'll see that how much profit I obtained, then I will have to check at which price I have purchased it. I have purchased it for rupees 520. Now, what is my profit? My profit is not 1 minus 520 bit. 519 is not my profit. If I purchase the shares from the market at 540 today, just assume, chalo, let it be like this. I have purchased a share at rupees 540 today. Now, what it meant for? My profit is 539, purely wrong. This is not a matter of consideration. I have purchased it from the market. I am not purchasing from the company. So company is not going to record it in its books of accounts. Company is recording it only at the time when company is issuing these shares. Now company have issued these shares to the public. Now public is selling to each other. So I purchased this share from someone else at rupees 540. So there is no part of security premium on it. One thing should be clear to everyone. Now later on I sell it at rupees 560 after a week. So I earned a profit of 20 on it. Not 560 minus 1. I have earned the profit of 20 only. So the comparison is purchase price, sale price. While considering all this, this is not a point of consideration for me. This is the company's own books system. I am not going to consider it that I have purchased it 540, I have lost rupees 539 on it. This is a layman understanding. You people are not laymen. Let's come to the share capital chapter. Tell me, have you done share capital chapter or not? Karthik, just reply me. It has already been made clear to you in share capital from wherever you have done it. They must have to let you be very much clear that this is just the accounting part. If a company is issuing shares at rupees 30 per share to the public, this issue is made by the company. Then for the public, it is 30 rupees per share. I am purchasing it as a public. I am purchasing it as A purchased it, B purchased it, Pradeep Makkad purchased it. Anyone have purchased it. So we have purchased it at rupees 30. We are not going to consider it that the face value is 1, premium is 29. This is not a point of consideration for me, beta. This is a point of consideration for only one, and that is company. Company has its own process. company is meant whenever uh, whenever company is going to issue the shares, they must have authorized capital with them. They must have a issued capital with them. They must have a subscribed capital with them. All that is a process which you have learned earlier. So there, when they have fixed up their authorized capital, at that time they have fixed my face value of the share will be rupees 1 per share. Later on, when they have issued it for rupees 30. So that meant for they can enter it in the books of accounts at rupees 1 for share capital. That is a transfer only. They will transfer rupees 1 to share capital and 29 rupees to security premium. This is the company's own profit or loss. That is their understanding of company. But from my point of view, this point is not considerable. Now coming to the employee stock option plans or anyone else, whenever this part has been over, later on, whenever company is going to issue the shares, company will also consider the loss or profit from market point of view. Now the market price of share is the company is 540 rupees per share. Once company have issued shares for rupees 30, the company will not book profit of rupees 540 minus 30, 510 in its books of accounts. This is not practically allowed to company, but company knows that my selling price is 540. If I am going to give shares to anyone at lower price, I am going to lose that amount because I may issue the shares today. If company is interested to issue the shares, whether company will issue at rupees 30 or 540, just tell me one thing, beta. A company is going to issue the shares today. Last shares were issued by the company about 2 years back at rupees 30 per share. Today, market price of the company is 540 per share. At which price company will issue the shares to public? 540 or near to it, not the 30 rupees ना, company will not issue it. बेटा बड़ा सिंपल है कि कंपनी का जो किताबों के अंदर रिकॉर्डिंग का प्रोसेस है, वहां सिक्योरिटी प्रीमियम को और शेयर कैपिटल को हमें अलग अलग शो करना पड़ता है, और सिर्फ किताबी काम है. अदरवाइज जो जेन्युइन वे में है, हमारा लॉस या प्रॉफिट कैसे कैलकुलेट होगा, वो कैलकुलेट हमें करना है कि हमारा मार्केट प्राइस क्या है. मेरा मार्केट प्राइस है 540 रुपीज आज की डेट में, और मैं किसी को शेयर इश्यू कर दूं 300 में, तो मुझे 240 का तो लॉस होने जा ही रहा है. ये तो लॉस मैंने खुद ही एब्जॉर्ब करने का सोच लिया, तो मुझे 240 का मुझे लॉस होने जा रहा है. मैं उसको बुक्स में प्रोवाइड फॉर कर रहा हूँ. ये इस चैप्टर का कंसेप्ट है. बिकॉज मैं अपने एम्प्लॉइज को शो भी तो करूंगा, देखो मैं इतना आपको फायदा दे रहा हूँ और मैं इतना लॉस आपकी वजह से बेयर कर रहा हूं. तो ये हम उनको शो करने के लिए कर रहे हैं. हम लोग अपनी बुक्स में शो कर रहे हैं कि हम लोगों ने कितना लॉस उनकी वजह से बेयर किया. बिकॉज ये अलाउड नहीं है कि आप 10 रुपए की चीज, कंपनी को ये अलाउड नहीं है कि 10 रुपए की चीज किसी को 2 रुपए की दे दें. ये कंपनी को अलाउड ही नहीं है. इसलिए आपने तो रिलेटेड पार्टी एएस भी करा है, वहां पर भी आपको यही समझाया कि अगर आपका कोई रिलेटेड पार्टी है तो इसका मतलब ये नहीं कि आप उसको सस्ते में शेयर दे दो, सस्ते में कोई सामान बेच दो. अगर आप किसी को कोई भी सामान सस्ते में दोगे तो उस केस में वो प्रॉब्लम आपकी है और उसको आपको डिस्क्लोजर देना पड़ेगा. दिस इज नॉट अलाउड बेटा. क्योंकि कंपनी जो है वो कंपनी किसी डायरेक्टर की, शेयर होल्डर की नहीं होती, कंपनी पब्लिक की होती. ओवरऑल कंपनी जो पब्लिक की है उन सभी शेयर होल्डर्स की है जिन्होंने उसमें शेयर परचेज किए, चाहे वो 1 शेयर है चाहे वो 1 लाख शेयर है. सो कंपनी इज रिस्पॉन्सिबल टू देम. तो कंपनीज पॉलिसीज मस्ट बी क्रिस्टल क्लियर. They must be without any bias, without any favorism. So these things are to be kept into mind. I think now it is clear to everyone. Once again, explain what to do. Okay, very good. Let's come to Mr. Ben Reddy. Yes. At the end, when the shares are issued to the employees, what do we have to do? We have to check we have created the provision of 50,000, but actual utilization of provision is only 40,000 due to any reason. Either employees have left us, or policy or offer is lapsed due to the reason that they are not interested to purchase it. So 10th round provision is not required now. It is to be reversed. Whenever provision is to be reversed, to create a provision, the entry is profit or loss account debit to provisioning. But to reverse it, we have to reverse the same entry. You see that our entry is profit or loss account debit to imply stock option outstanding account, because debit and credit will cut with each other. This debit and credit will cut with each other. And the entry will remain profit or loss account debit and imply stock option outstanding account credit. So the real entry is profit or loss debit and implies stock option outstanding credit. So whenever we have to reverse this, the entry will be implies stock option outstanding debit to P&L. But profit or loss account is not allowed to be created in routine. So what we are doing, because only if there is a profit we are doing it. So better we have to transfer it to general reserve, because profit loss always goes to general reserve. So we have transferred it to general reserve. Implies stock option outstanding account debit to general reserve. Better. Exactly, better Karthik. You're right. Nilab Joe Mondal, sir, there are similar questions in AS5. Illustration number 2, page number 1. No matters, better. I apologize for posting it late, sir. I have these doubts, but couldn't post it due to late date issues. It doesn't matter. Anyone who have any doubt in accounting standards, they need not to worry. Their doubts will be taken on 21st of August. Note it down with you. On 21st of August, that is next Sunday, not the coming Sunday, that is day after tomorrow. No, it will be on next Sunday, not the coming Sunday, next Sunday from 6 to 8:30 p.m. There will be a special session on accounting standards. I'll take doubts of all the accounting standards. We will do something new in accounting standards. How to get good marks in accounting standard, that will be covered on that day. So bring your doubts on that day. Namarta survey, fair market value on which date we should consider? On the date of granting of offer. Namarta, it will be on granting date. Khushbu, sir, can you revise everything at end? You doesn't matter. You need not to worry. If you are interested to take revision, you will have to see this video once again. One option. Second is whenever we will do some questions, it will be repeated automatically. It's 5:40. Okay, Karthik Gupta, sir, that is why I am saying company को market price से कोई लेना देना नहीं जब security premium reserve book करना होता है. Price which issued by company. So in this case, the price at which company is exactly better. You are right. Fair market value on which date we should consider already discussed. The first query I sent 2 times, so please ignore. Okay. So I think all the queries are attended now. Let's come to the questions part. Come to illustration number 2. Illustration number 2. So see illustration number 1 also. It will be easy to do. A company has its share capital divided into shares of rupees 10 each. So 1st of April, it granted 10,000 stock options at 40 when the market price is 130. The fair value of the option calculated using an option pricing model is 90 rupees per option. Obviously, it is very much clear that market price is 130, stock option price is 40. So the loss which we are going to bear, that is fair value, is 90 rupees per option in this case, 130 minus 40. So employee exercise their options for 9,500 shares only. The remaining option lapse, company closes its books on 31st of March every year. Let's understand this thing, that in the given case, no grant and exercise period and vesting period is given to you. Well, proper detailed information is not given to you. He says it has been given in one instance. This is the date of granting. You will see on 1st of April 2011, this all has been granted. So this is the date of granting. But where is the vesting period? No vesting period is there. One thing is very much clear. Exercise period is given that they may exercise it. Yeah, you may see there is a vesting period also. Vesting period is how much? 1st of April 2011 to 15th of March. So this is what? This is vesting period. This is granting date. This is vesting period. So where is the exercise period? This is exercise period. A company has its share capital divided into shares. So that has been made clear. And this is on 1st of April 2011. If it is on 1st of April 2011, this is what? This is the date of granting. And then he says the options were to be exercised on which date? 15th March. So exercise, it can be exercised only if all will vest that shares, if all will remain in the company. So I may assume that this is a vesting period from 1st of April to 15th of March. And from 15th of March to 31st of March, they will have to exercise. This is the exercise period. Now we have offered them 10,000 shares to all the employees. What is the price? This is the issue price, 40 rupees. Now on that market price is given to us 130. Fair value, or we can say loss to the company, loss to be borne by the company, is how much? 100 minus 130 minus 40. So this is 90. This will be normally named as fair value in your questions. Now, in the given case, there is a big difference in comparison to the entries done by us earlier. Earlier, I am saying, if you see, I was saying that all that is to be done on 1st of April 2021, and then there is a vesting period of 2 years, and that doesn't meant for the same year. But in the given case, you will see it all depends in the same year. It all happens in the same years. That is 2011, 12. You see that date of granting is within 11, 12. Date of granting is within 11, 12. And then you see vesting period is within 11, 12. Exercise period is within 11, 12. So nothing is going to expire. Nothing is going to be done in next year. So it meant for, this is very much clear, all plannings, all things will be done in the same years. So there is no need of creating any provision for that. Provision is to be created always for the future losses. Do not anticipate gain, provide for probable losses. Here, everything is already clear. Whatever loss we are going to bear, whatever profit, that will be calculated in the same year. If in a particular period, I'm selling goods for rupees 1 lakh, which has been purchased by me in the same year for rupees 80,000, I'm going to bear a loss of 20,000, and that has been done in the same year. So there is no problem, because in a particular year, assume 21, 22, I have purchased goods worth rupees 80,000, sold it for rupees 1 lakh. I have suffered a loss of rupees 20,000. It will be automatically entered in the books of account. There is no need of creating any provision. Same thing happened in this case. In this case, first of all, when this grant is made, there is no problem because vesting period lies in the same year. So here direct entry is to be passed for issue of shares. And how many shares are to be issued? That is made clear. Only 9,500 shares are to be issued, because only 9,500 employees have gone for the option, 10,000 have not gone for the option. So the difference of 500 is not considerable. That is not a considerable issue, because there is no need of any creating any provision. only we have to issue 9,500 shares. So here it will be a simple entry, nothing typical. This is not like which we have discussed in our illustration. Illustration is to somehow advanced. This is comparatively simple. So here you will see we have issued 9,500 shares for rupees 40. This is the amount received by us, 3,80,000. Now, in addition to that, we are going to suffer a loss of rupees 90 per share. This is very much clear. Whatever loss we are going to bear, that is to be directly transferred to expense account, not to the outstanding provision account, because no need of creating any provision. So it has been directly transferred to employee compensation expense account, 90 rupees, to equity share capital 10, and remaining 120 will go to security premium. So this is a simple entry where we will write it off profit or loss account debit to employee compensation expense account. There is nothing typical in this case. 1st April to 15 March, very good. Exactly, it's very simple question. 90 per option, the loss on ESOPs, that is the fair value and loss, both things. Occasionally, one and the same thing. Need to create liability and regulate expenses directly. Exactly, Namarta, you are 100% clear. Here, there is no need of creating any provision. Instead, whatever loss we are going to bear, that is clear to us, so we will bear it directly. Come to illustration number 2. Here we will see something new, or something which we have already studied. ABC Limited grant 1,000 employees stock option on 1st of April 2010. So this is on which date? 1st of April 2010. And the granting is made at rupees 40 per share. Market price is 160. So how much is the loss? 160 minus 40, which will be named as the fair value of option, 120 rupees. So we have to bear a loss of 120 per share. Vesting period is not 1 year now, 6 months. It is 2.5 years. So if the employees will retain these, retain in the company or work in the company for minimum 2.5 years, only then they will be eligible to get it. And the maximum experience exercise period is 1 year. Means whenever vesting period is over, exercise period is given to them for 1 year. So this is the information given to you. 300 unvested options lapsed on 1st of May. 600 options are exercised on 30th of June. 100 vested option lapse at the end of the exercise period. Now this is the information given to you. Total 1/3 employee stock options are given. He says 300 are unvested. Unvested means which are not applied by the, not taken by the, not taken by the employees. This is lapsed. Lapsed means now these cannot be issued. These cannot be applied even. 600 options are exercised. So 300 plus 600, this has been applied, this has been taken over by them, plus 100 vested option lapse at the end of exercise period. 100 vested option lapse. Total is 1,000. Now you need not to consider this thing that this is done in this way, this is done in this way. It will be very simple to understand better. Some employees may leave the organization. So if some employees may leave the organization, we need not to create a provision for them. So automatically their option will be lapsed. So what means for 300 option, unvested option lapsed? Because period is not yet over. See when the period will be over? 1st April 2010 to 2.5 years. This will be over on 30th of June 2012. But why it has been over on 1st of May? Because obviously in this case, in the given case, this is very much clear. In the given case, it is very much clear that there may be such type of event occurred in the organization that on 1st of May, we are very much sure that 300 unvested options which are not yet applied for are lapsed. Lapsed means for employees have left the organization. If lapsed before the expiry of the period, that means for they have even surrendered that we are not going to take your shares, and that has been already made clear by them, or they have left the organization, or they are not interested to fulfill that condition, whatever condition is applied on them for acquiring that, we are dead sure that now it is not required to be kept with us. Next, on 600 options are exercised. Okay, 100 vested option left. This is a period based. Actually, this meant for those options which has not been applied by the employees, as they are not interested to take it, but they are with us. Employees are with us, but they are not interested to go for it. Is that clear now? Any doubt? So let's start with it. How to do it? Very simple and very easy. First of all, see, it is 1st of April 2010. So on 31st of March, we have to create a provision, because in the year 2010-11 nothing has happened. So due to that reason, we have to create a provision for the same. How to create the provision? That is very much clear. You will see 1,000 shares are to be given to the employees, and loss to be borne by us is 120 per share. It is 1,20,000, which is to be distributed in 2.5 years. Because as on 31st of March 2011, we are not clear that how much will be lapsed, how much will not be taken by them. So as on 31st of March, we know that very well. We know it very well that we will have to write it off within 2.5 years. So annual return of annual provisioning is equal to 48,000 per annum. per annum. Note it down. ऑप्शन प्राइसिंग मॉडल बेटा जो हम कर रहे हैं इसको ऑप्शन प्राइसिंग मॉडल ही कहते हैं कार्तिक. If exercised in same financial year, then no transfer to outstanding is required. Am I correct? 100% correct, Kushi. We have created liability for 300 shares for 2 years, and on 1st of May, provision will be reversed. Exactly, beta, you are 100% right. Namarta, you are doing very good. So this is 48,000, which is the provision to be created. And see, everything happened on 1st of May. Before 1st of May, nothing has been happened. See, if we have started working on 1st of April 2010, then 2010, 2011, nothing has happened. So 48,000 will be the provisioning to be created. In 2011, 2012, nothing has happened because up to 31st March, nothing has happened. This whole thing happened on 1st of May. So 48,000 is another provision to be created because it is to be created every year. The picture is cleared on 1st of May only. So before that 2 years, we will have to pass the entries and it will remain same. See, entries are clear to everyone. What will be the entry? Employee compensation expense debit to employee stock option outstanding account. Profit loss account debit to employee compensation expense account, repeated in the next year also. I think 2 years entries are very much clear to everyone. Coming to third year. What happened in the third year? Now, what is the third year? Here, third year is 2012, 2013, and all adjustments are to be made at the end of the year. But if sale or purchase is made or any transaction has been done, then transaction will be entered on the date when transaction occurs. So in 12-13, 300 options are lapsed, but these 600 options are exercised on 30th of June. That is not in 2012-13, it is in 13-14. So in this year, in 12-13, what happened? till date, we have already created provision of 96,000 in the previous 2 years. We know it very well because we have created a provision of 48,000 for 2 years. Now, this is very much clear that only 700 will continue for the next period. Only 700 will continue for the next period. And the loss of half year will be entered in this year because this year their vesting period will be over. So total loss to be written off till now, total loss which we are expecting to be written off till now. Now, what is the total loss? Total loss how much is the total loss expected on remaining shares? How much is the remaining shares? We have offered them 1,000 shares, 300 has been lapsed, only 700 will continue in the next period. So we are expecting loss on 700 shares at the rate of 120 per share. How much it will be? 84,000. Provision required is only 84,000, but we have already created provision of 96,000 in the previous years. So 12,000 is the excess provision, and this provision is due to the reason of this 300 unvested shares. So this will be reversed. One method, second method. Already created provision of 96,000 plus further provision is to be created. Further provision is to be created for 1,000 shares because we have to create a provision for 48,000, rupees 48,000 for full year. But now 2 years have already been expired. Total period is 2.5 years. So only half year provisioning is to be created this year, 48,000 for full year. So how much will be for half year? 24,000. So this year, otherwise, if everything occurs normal, then you have to create a provision of 24,000 in this year, and total provision will become 1,20,000. And you have to reverse provision for 300 shares at the rate of 120 per share because total provision is to be reversed for them, and the provision is 120 per share. It will be 36,000. How much it is? 84,000. Another method. Otherwise, what we have done, 96,000 is a provision created now up to date. That is, you will see that last 2 years total provisioning is 96,000. But what is required as on 31st of March 2013? As on March 2013, we need provision for only 700 shares, and total provision required is 120 per share. So it will be 84,000 only. So we may get 84,000 by this method or by this method. It is up to your choice. I think this is more easy and simple. Whatever is required at the end, keep it. Difference is to be written off. So this is to be continued. This is to, if you will go by this method, you have to create 24,000 as a provision, reverse 36,000 as a provision. Net effect will be only 12,000. And here net effect is again 12,000. So this method is comparatively an easy method according to my point of view. You have to see that how much is the provision. This has been given in your module also. In your module, this method is applied, and this is a good method. Tell me, is that clear to you? I've given you two methods. First method meant for this, that till now we have created provision for 96,000 already. In the current year, what we will do in 12-13, we have to create a provision for half year only because we know it very well. 2 years provisions are already created. The total period is 2.5 years. So half year provision is to be created this year. For creating half year provision, total provision is 48,000. it will be 24th to be created in this year. So this is to be created. How much is to be reversed? 300 shares are lapsed. So due to that reason, they will have to be reversed. So you have to reverse with rupees 36,000. So nutshell, if you will see, 12,000 is to be reversed. 36,000 is to be reversed. 24,000 is to be created. Instead of doing this by this method, I suggest you to go for the method. What is the method? See what is the closing balance, opening balance we may say. Sorry. Opening balance of provisions. 96,000 minus closing provision required after revised changes. After revision or changes, whatever is required. So we know that 700 shares will continue for the next period. And how much provisioning is required for them? 120 per share. This is very well known to us because total loss is 140. So because their life is, their vesting period is over. So total loss is to be shown here, that is required. Now 84th one is to be carried, is required. This is to be kept in balance sheet. This is already in balance sheet. So what to do? We have to adjust 12th. We have to reverse it. To reverse it, we will pass an entry. What will be the entry to be passed? Entry is employee compensation, employee stock option outstanding account debit to general reserve. I think this is very much clear to everyone. Just tell me if it is clear, beta. Not clear, tell me. I'll explain you. So 12th is clear to everyone. Now on 30th of June, what happened? 600 employees have opted for their options. They have purchased the shares, and it is very simple entry: 600 into 40. Then employee stock option outstanding count. Obviously, 120 is the loss to be borne by us to equity share capital to security premium. This is very much clear to everyone. Maybe on 1st of October, he says, what he says? He says on 1st of, at the end of the exercise period, 100 vested option lapsed. Now, what is the end of the option period? Now, tell me, the option is given on 1st of April for 2.5 years. When this 2.5 years will be over? 1st April 2010 plus 2.5 years. This will be over on 30th of September. But it will be up to 30th of September 2010, 11, 11, 12, 12, 13. So it will be up to 30th of September 2012. Okay, and then 1 year will be the 1 year will be the exercise period that is given. Maximum exercise period is 1 year. So it will be up to 30th of September 2013. So it will have been lapsed on 1st of October 2013. Because on 1st of October everything is clear. Now this will not continue. There is no option left. So this is a vesting period of 2 years. This is the exercise period of 1 year. So this all will be lapsed on 30th of September. That is on 1st of October, because 30th September is the date which will be included in the exercise period. And we will take 1st of October when all exercise period is over. So on 1st of October, we know that 100 options are lapsed. If 100 options are lapsed, we know it very well that for 100 options, how much will be the amount? 100 into 120 per share, that is 12,000. So this will be reverse ESOP, employee stock option outstanding account debit to general reserve. Namarta, you are very well right. Very good. Now tell me, everyone is clear in this illustration or having any doubt? Out of total 1,000, 300 has already been lapsed, 600 has purchased the options, 100 has been left, and they are lapsed. Or you may also get this balance from your implied stock option outstanding account, where balance is 84,000. Already utilized balance is 72,000. So 12,000 is left. By this way also you can get it. There are two methods. Use anyone as per your choice. Clear? Not clear? If it is clear, obviously you will be able to understand the next concept. If it is not clear, you are not going to do the next concept. That will not be easily to understandable. So I would suggest you to first of all understand this, then I will proceed. Those who are clear, go for question number 3, practical problem number 3. Those who are not clear, ask me the query. Question number 3 you have to do now, fast. Practical problem number 3. I've tried my best to let you be clear. Having any doubt, please tell me. Otherwise, I will continue. Question number 3. Question number 1 and 2 will be done by you, yourself, at your home. Discuss about question number 3. A company has its share capital divided into shares of rupees 10 each. Face value is given to you. Granted 5,000 implies stock options at 50. Market price 140. Fair value 90 means 140 minus 50. The loss is there of rupees 90 per share. Options were to be exercised between 1st of March to 31st of March. So option is to be exercised means what is the vesting period? Send me the vesting period fast beta. Time is less, do it fast. Vesting period I asked from you. Vesting period. Those are two. Vesting period is good, Akashnil. Good. All must have to send what is the vesting period beta. After vesting period, tell me what will be the entry to be passed, first entry to be passed in the year 1112. First entry to be passed in the year 1112. Vesting period is 1st of April 2011 to 28th of Feb 2012. That is clear to everyone maybe because number of students have sent the answer and this is correct. Date of grant to the date when it is to be exercised before that. So it is 1st of April 2011 to 28th of Feb 2012. So this is the vesting period. Now send me what will be the entry and the amount. What will be debited, what will be credited, first entry. Question is to be done by you. I am just discussing with you. First entry is to be passed in 2011-12 on 31st of March 2012. Tell me what will be the entry and what will be the amount, both. Namrata, you are not right. I'm asking for the entry to be passed in the year 11-12. I'm giving you 1 minute. Good, Akashnil. All must have to send fast. Read once again. Those who are not clear, read once again and then send me the answer. अगर इस तरह से चलेगा तो मुझे लगता नहीं कि हम लोग पढ़ाई कर रहे हैं, क्योंकि अगर हम लोग आंसर ही नहीं भेजेंगे, इतनी देर लगाएंगे आंसर भेजने को, तो इट विल बी डिफिकल्ट. आई एम गिविंग यू 1 minute. 1 minute इज गोइंग टू बी ओवर. हितेश जैन, वी आर नॉट करेक्ट. So time is over. Let's come to the question. Company has its share capital divided into. So all that is already discussed. He says company has its share capital divided into shares of rupees 10 each. It granted 5,000 at rupees 50 each. Option were to be exercised between 1st of March to 31st of March. The employees exercise their option for 4,800 shares only. Remaining options lapse, pass and cessation. This is just like question number, illustration number 1, which we have already discussed. Very simple, beta. You have taken too much time to do this. It's very simple, beta. I think it should be done by everyone, but I received answer from only few of the students. So bank account debited, because in this case, all the period lies within the same year. You will see in 2011, 12, everything has been happened. Your vesting period is also in that. Your exercise period is also within that, because 1st March to 31st March is the exercise period. So all things have been, so there's no need of creating any provision. So bank account debited, 4,800 shares are to be taken by the public, by the employees, sorry, at rupees 50. Employee compensation expense account debit with 4,800 into 90 to equity share capital with rupees 10 per share, that is 4,800 into 10. To security premium, 4,800 into 130. What will be the next entry? That is just creating a confusion so that others may not copy your answer. Namrata, it was only for that purpose. Okay, you was right. There's no problem. Kushi, sir, vesting period starts in 2011 and also over in 2012. That is 2011-12 अकाउंटिंग ईयर, उसमें ही वेस्टिंग पीरियड स्टार्ट हुआ, उसी में खत्म हो गया. तो इस केस में कोई प्रोविजन की रिक्वायरमेंट नहीं है, कुछ नहीं है. आपको सिंपली एक एंट्री डालनी है जब आपने वो 4,800 शेयर्स लोगों ने लेने और 200 लोगों ने नहीं लिए, उसकी कोई एंट्री नहीं डालनी, बिकॉज जो लैप्स हो जाएगी उसकी कोई एंट्री नहीं जाएगी. तो बस इसको सेकंड एंट्री बोलो, क्या डालोगे, भेजो आप सेकंड एंट्री. 5,000 में से 1,400 शेयर्स लोगों ने लिए, बिकॉज हमने कोई प्रोविजन ही नहीं क्रिएट करनी. प्रोविजन तो तब क्रिएट होती है अगर हम लोग हमने नेक्स्ट ईयर में कुछ ऐसा करना हो. अगर इसी साल में हम लोग प्रोडक्ट को खरीदें और बेचें और प्रॉफिट कमा लें, तो वो तो अकाउंटिंग का पार्ट हो जाता है नॉर्मल. उस केस में कोई प्रोविजनिंग की रिक्वायरमेंट नहीं रहती. प्रोविजनिंग की रिक्वायरमेंट तो तभी रहती है जब हम लोगों ने कोई काम फ्यूचर में करना हो जिसपे हमें लॉस होगा. तो इस केस में तो फ्यूचर में हमने कुछ करना ही नहीं है, सब कुछ इसी साल में हो गया, इसी ईयर में हो गया. सो देयर इज नो वरी. Profit loss debit to employee compensation account. Very good. Amount you may get it. Amount is already mentioned. This is 4800 into 90. So the entry will be profit loss account debit to employee compensation expense account. Very good. Hitesh is correct. But why remainings are not sending me the answer? I am not clear, beta. If you will deal in this way, then it will be very difficult to teach. Send me the answers fast. Question number 4. बेटा इलस्ट्रेशंस करना तो इजी रहता है, प्रैक्टिकल प्रॉब्लम करो ना जब आपके सामने सॉल्यूशन नहीं है. इसको मेरे साथ करो, यू विल बी इजी टू सॉल्व इट, यू विल फील इजी. Amount you may get it. Amount was I don't know. So let's come to question number 4. Its solution is also given to you. Later on you may check it out if you have any doubt or you are interested to recheck it. There's no problem. Come to illustration. Question number 4. Now this is to be done by you in fast manner. On 1st April, company offered 100 shares to its 500 employees. So how much is the total shares offered by the company? At rupees 50 per share. So a year is given to them to accept this offer. The shares issued under the plan shall be subject to lock-in on transfer for 3 years. Means once shares will be issued, it will be kept by them for the next 3 years from the grant date. The market from the grant date means from the date of 1st of April. So they must have to keep it with them. The market price is rupees 60 per share. The market price is rupees 60 per share. Due to post vesting restriction on transfer, the fair value issued under the plan is estimated at rupees 56 per share, and fair value per option worked out to be 6 rupees. So that is very much clear. Here loss is rupees 6 per share only. 400 employees accepted the offer and paid rupees 50 per share. So record the issue of share in the books. So what will be the journal entry? Fast. Waiting for your answers. Total shares offered 50,000. Exactly right, beta. Now what will be the first journal entry to be passed? This type of questions has already come into your exam for 5 marks. Giving you 1 minute. Send me the answer fast. Everyone. Contribution of every student is required, beta. हितेश वेरी गुड. करते जाओ, सारे लोग करो. मुझे लग रहा है अकेला हितेश और आकाश नील और खुशी और नम्रता कार्तिक कुछ ही स्टूडेंट पढ़ रहे हैं. ओनली कुछ few students are there. Remaining are not sending the answer. Why? Are they not interested to increase their speed? When the result of ICA comes, student says, I am not clear. Why? Because we are not doing hard work. Those who are always remain smart, active, and attentive, they normally get good marks in the exams. But those who are not clear are normally, due to this reason, because they are normally lazy, idle. So are you interested to be a lazy or idle person? Because in CA we doesn't accept lazy and idle persons. We have only smart and active persons. Time is already over. Fast. Giving you 1 more minute. So only few have sent the answer. I'm just waiting for your answers. Send the second entry. Those who have already sent the first entry, write the second entry to me. Fast. They have 1 minute to solve the second entry. And those who haven't sent the first entry, send the first entry. Very good. Very good. Fast. Very good. Those who have done it, very good. Those who haven't done it, they haven't sent me any doubt. So I think I need not to discuss this question, because this is a very simple question. This is just creating confusion. We doesn't have to confuse for lock-in period. Let it be very much clear. There's no meaning of lock-in period for us. We are just considering the vesting period, exercise period, and granting date. We doesn't have to keep concentration on that, but will be the lock-in period once shares are issued, because that is not a point of consideration for us. We are just keeping consideration up to the date of issue of share. Once shares are issued, there's no post accounting treatment after that. एक बार शेयर इशू हो गए, उसके बाद की हमें कोई ट्रीटमेंट से कोई उसके बाद की कोई ट्रीटमेंट नहीं होती, लॉक इन पीरियड की कोई ट्रीटमेंट नहीं होती अकाउंटिंग में. सो इसका कोई मीनिंग नहीं था इस क्वेश्चन में, ये जस्ट कंफ्यूज करने के लिए दिया गया था. इस केस में 1 ईयर में सब कुछ हो गया है. तो ये केस बिल्कुल पिछले लास्ट क्वेश्चन की तरह ही है, सिमिलर है. आप लोगों को जितने शेयर्स आपने 400 इशू किए थे, उसी के लिए एक एंट्री डालनी थी. बैंक अकाउंट डेबिट, एम्प्लॉय कंपनसेशन एक्सपेंस अकाउंट डेबिट टू शेयर कैपिटल टू सिक्योरिटी प्रीमियम. और उसके बाद आप लोगों ने नेक्स्ट एंट्री डालनी थी प्रॉफिट और लॉस अकाउंट डेबिट टू एम्प्लॉय कंपनसेशन एक्सपेंस अकाउंट फॉर दैट 400 शेयर्स, जो भी आपको लॉस हुआ है उसमें. दैट्स इट. लॉस कितना हुआ है वो 6 रुपीज पर शेयर है. एवरीवन इज क्लियर? 56 माइनस that was 50, so you issued at rupees 50. That's it. It's a very simple question. उसके बाद मेरे को ना सिक्योरिटी प्रीमियम रिजर्व में डाउट आया है. क्लास में बैड क्लास के बाद कुछ देर एक्सटेंड कर सकते हैं प्लीज, डाउट क्लियरिंग के लिए. सर मेरे को ना सिक्योरिटी प्रीमियम रिजर्व में डाउट आ रहा है. But a security premium doubt can be clear very well if you will go for the share capital chapter once again. I suggest you, Karthik, to go for the share capital chapter once again from your CA foundation book or from your +2 book, wherever you get it, because until unless you are not clear in share capital, you will not be able to do the further chapters, because this advanced accounting is purely related to companies. If you haven't cleared the concepts of companies, you will be always in difficulty. So I suggest you to go for that. And then if there is a doubt, discuss with me tomorrow, because tomorrow on Saturday the class will be there and I'll take the doubts whatever is left. I'm going to do illustration number 5 for you. Illustration number 5 beta. Very good illustration from examination point of view. You must have to do MCQs also. Those are given into your module. That will extend to your knowledge. Here, this is given in your chapter. T Limited granted option for 8th on equity shares. Nominal value of rupees 10 per share on 1st of October at rupees 80. So this is during the year. This grant, this date of grant is 1st of October 2010. Market price is 170 and your loss is 90. 170 minus 80, this is 90 is your loss. And the vesting period is 4.5 years. So total loss is 8,000 into first, do it fast beta. 8,000 into 90. It is 7,20,000. So this loss is to be divided into 4.5 years. So how much is the loss per annum? How much is the loss per annum? 7,20,000 divided by this. It will be 1,60,000. So 1,60,000 is to be written off every year. Every year we have to create the provision for that. But the new thing is that here 1st of October is the date. So in the first year 2011 to 10-11, while creating provision, you have to keep it into your mind that half year provision is required only. So half year provision is how much? 1,60,000 divided by 2. Divided by 2, sorry. 1,60,000 divided by 2. Yeah, into 1 by 2 kar lo, 80,000. So 80,000 is the provisioning which is required. Very good, very good. So we have to create provision for first year for 80,000, for next year 160. ऐसे चलेगा. This will be for 4.5 years. He says 4,000 uninvested options lapsed on 1st of December. Why? Obviously, employees have left us like that. There may be a such event. So this type of cases when comes, we'll have to work accordingly. So this is on 1st of December. Before 1st of December, there is no problem at all. So in 10-11, 80,000 is the provisioning. In 11-12, 1,60,000 is the provisioning. But in 12-13, there is a doubt. So how much will be the provisioning for 12-13? You have to get it. How much will be the provisioning for 12-13? This is your duty to get it. I'm giving you the option. Find it for me. Again, 1 minute. Do it fast. What do you have to tell? How much will be the amount? वैसे 1 minute में होने वाला नहीं है कहीं होगा, तो इसलिए no matters. Try it. कैसे करना होता मैंने बताया था पिछले केस में, मैंने करके दिखाया. याद है 84,000 में से मैंने 72,000 माइनस करके 12,000 कैलकुलेट किया था. उसी तरह से कैलकुलेट करना है यहाँ पर. The way I have calculated in the previous one question where 84,000 minus 72,000 is done. Fast. Speed test is going on fast. Someone have sent me the answer. Very good. करते जाओ फास्ट, सारे लोग करो, स्पीड से करो. देखो बड़ा सिंपल है कि हमारी जो फर्स्ट ईयर की प्रोविजनिंग है दैट इज 80,000. If you will see provision of first year, चलो let's see the solution. That's more better because time is not allowing us to continue. So I would like to come to the solution. Yes, on 1st of December, 4th on unvested options lapsed, on which date expenses recognized to be transferred to GR. So how much has been created till now? We have created 80,000 in the first year, 1,60,000 in the second year. So this is the total provision up to date, opening provision, what I am saying, minus provision to be carried forward. How much provision is to be carried forward? We have to kept provision for, out of shares, total shares are, how many total shares are there? Yes, we have to grant 8th option, but 4th are lapsed. So 50% is left. So 50% provisioning is required. The procedure may be anything. It is as per your choice. So they have made it by this way. We may go by any method, whatever we feel suitable. 80,000 is the provision for first 6 months. 1,60,000 is the provision for next period. So opening provision is 2,40,000. How much is to be carried forward to the next year? In the current year also we have to create provision for 1,60,000. So while creating provision for current year, the problem arises because we need not to create this provision because this time problem is something different. So we have 2,40,000 as the opening balance minus how much is to be kept and carried forward to the next year. We have to kept for 4,000 only, for 4,000 shares only, because out of 8,000, 4,000 has been lapsed. So carried forward only 4,000 shares. 4,000 shares, how much is the period? Till now, 4,000 into 120. This is the total amount to be written off. And this amount is to be written off in 4.5 years. But how much period is already expired? How much period is already expired? Already expired period is 2.5 years. You may see half year is this, 1 year is this, and 1 year is the current period. So total is 2.5 years. So this is the way how you will get it. You may calculate it. It is to be kept. Balance plus minus is to be entered. 4,000 shares are to be retained, which are not yet lapsed. 120 is the total loss, which is to be written off in 4.5 years. Till now, only 2.5 years is expired. So we have to go by this way. I think it is clear. Sorry, it is 90. I have wrongly done it. It is 4,000 into 90. No one is considering all these things. Maybe students have gone or you are available better. This should be 90. So total amount is 1,20,000 to be kept. This is maybe 3,60,000, which is required. So 1,20,000 is to be carried forward. Very good. Number of students have sent the answers now. Get the amount. It is 2 lakh which is required. This has already been done. I think this is clear to everyone. You may do this question. Having any doubt, you may discuss in the next lecture because time is already over. Okay, then we'll meet in the next lecture tomorrow at the same time. Of this chapter, we will take doubts tomorrow. Obviously, we will try to cover as much as possible tomorrow. So all the doubts will be taken, all the illustrations and practical problems. You have to complete this chapter tomorrow. We will discuss about the doubts and go for some new concepts, whatever is there in this chapter. Illustration number 7 is somehow typical, 6th and 7th. So you may see that if you will be able to solve it, very good. Otherwise, I'll help you. Otherwise, all the questions, all the illustration, you have to do it. Okay, then. All the best. Yes, sir.